All right. Yo, what's up? All right. So this is a trade recap of the I don't even know. Sunday 3/22. Yeah, Sunday, March 22. Right. And all right. So me on the market open of daily open. I think it's called this shit, right? So we opened up and we swept this New York PM low, right? And I'm like, oh damn, I want I wanna I wanna teach you something. So let me show you something. Let me see if I can find it. So let me draw it out. So every time in the market, let's say we move down, right, and we sweep some sort of liquidity, right, price will always eventually go up. Okay, and there's two scenarios. So let's draw the same thing in these two drawings. There's two things that could happen right now. We could either boom, we could just start going up and switching the trend from bearish to bullish, or we're gonna start reimbalance into a fair value gap and we start moving lower and taking out this liquidity. All right. So if we have that in mind, um, when price, give me a second, when price swept this low, I wanted to see what type of reaction do we have. We set this low and we made a 5 minute fair value gap, right? When we made this 5 minute fair value gap, I'm like, yo, I'm gonna set up a condition. A condition is when if this, I'm gonna do this, and if this happens, I'm gonna do this different thing. And and when this happens, I made a condition. I'm saying in my hand, I'm like, yo, we made a 5 minute fair value gap, right? And boom, if this 5 minute for rally gap inverses, I'm going more to this slow right here. I'm gonna be trying to short this slow right here. And, but if we inverse these two 1 minute inversion for rally gaps, or this 1 minute for rally gap, we inverse this 1 minute for rally gap, I'm going to tell myself, I'm gonna be like, oh shit, yo, we're going higher, because we just inversed a bearish fair value gap that is giving us our confirmation. Excuse me, is giving us our confirmation that we're gonna go higher. So we hit this 5 minute fair value gap. I think we hit the 0.5. I think, right. We inversed this fair value gap, and I'm like, damn. All right, I'm gonna enter on this position, and what is my target? I've always, bro. I want you to look at this. If we, like, if I draw this wick from the top to the bottom, do you see how we respect 0.5? We respect this wick. We never swept this high. And that's it's not always going to happen, but most of the time it's going to happen. And I'm like, damn, I'm not going to target wait, hold on. I'm not going to target the wick because from what I've seen in the market is that if when we hit the wick, we start going down or we start going up. We start rejecting off the wick. So always my take profit is gonna be at the close or at the open where price started, not at the top of the wick or the bottom of the wick. As this example, I'm not gonna target the top of the wick. I'm gonna target to the open of this candle where the wick started, where this wick started too. So that's another thing. That's my target. And my stop loss strategy, I put my target first and I just put a 121 RR. 121 RR. That's it. And making sure that your what's it called? That uh, that your fuck that your inversion for value gap and your stop loss is below the inversion for value gap or on the top of the inverse fair value gap. Okay, because sometimes price wants to retouch that inversion fair value gap and then reject up or reject down. So if we start going very very down, we're going like, oh, well, that's not a reaction that we want to have. So that's basically it. Like we took this 1 minute inversion for Rally Gap. I don't think there was a 2 minute because I still don't have the plan and I'm trying to have like a prop from account. I'm really trying to get to that level. And yeah, we took this 1 minute inversion for Valley Gap, wrote it to the 1 RR. We look at this, bro. When I saw this, in my head, or if I was in the prop firm, I will close out because bro, I don't know. Bro, look at this. Like we're like we're like 4 ticks, 4 ticks, and when I see this reaction, I'm like, damn. You know what? I'm gonna close. I'm gonna close because what happens if we just get molested, bro? You could literally get molested by the markets, bro, just like that. And but I guess, and I want to tell you something is that I don't use break evens. Well, at least in Asian session, because if y'all notice, Asian session is very. I'm not gonna say it's choppy, but it's trendy, and I like to trade the trend. All right, and Asian session moves a lot. Like it's it's like trendy but choppy at the same time. So me using break evens is gonna be bad because it's like you're gonna miss the move even though you were right about your position, you know? But if we were in New York and we take out like a high, I will be break even. But in this case, we're in trading Asian session. So boom. And yeah, that's it. That's all I have for today. That's the bare minimum of this analysis. And yeah, all right. I'll see you. Peace out.